Yes. You know, fire danger top of mind right now, and a major rate hike is coming to California's insurance plan of last resort. That's impacting thousands forced onto this FAIR plan. The state insurance commissioner just approved a rate increase of nearly 30% starting in October. So the FAIR plan, a state-created but privately run insurer, serves more than 600,000 policyholders who can't otherwise get coverage, mainly because of high fire risk. So our Ann Makovit looks at one of those areas in the East Bay where neighbors are bracing for a big spike in their rates.
In addition to the price increases in groceries and gas, homeowners like Dixie Mohan now have more brick-and-mortar cost concerns.
It's going to be really tough on a lot of people.
She's talking about the home insurance rate increase just approved for the California FAIR plan of almost 30%. Properties with significant wildfire risk face the largest increases, like Orinda in the East Bay, where the average annual premium jumps to about $7,000. The numbers are similar where Mohan lives in Lafayette.
It's a very difficult situation. We talk about that among our homeowners all the time.
More and more private insurers have been kicking homeowners off their plans due to destructive wildfires in California. That has doubled the number of people driven to the FAIR plan, which is now stretched so thin it didn't have enough money to pay for all the losses in last year's Palisades and Eaton fires near L.A. And with so many new high-risk customers in the FAIR plan equation, the cost is going up for almost all of them.
People that are on a fixed income are really feeling that impact because they may have been paying, say, $2,000 a year for their homeowners insurance, and now they may be paying $10,000 for their homeowners insurance. That's unfortunately not an uncommon scenario that we're seeing at this time.
Ray Baddock is an insurance broker who recommends people consider a higher deductible for catastrophes only. Consumer advocates say the legislature needs to step in.
Too many people are on the FAIR plan, and it's costing them too much. We need to do everything we can to get people out of what should be our insurer of last resort.
She's the executive director of Consumer Watchdog, which sponsored legislation requiring companies to insure people who harden their homes against wildfire danger. That bill just died in committee. As for Mohan, she still has private insurance on her home for now.
We cross our fingers and hope that our number doesn't come up every year, because I don't know what you do.
Despite the hikes across much of the Bay Area, there are a few thousand FAIR plan policyholders whose rates will be dropping in the fall. That includes the entire city of San Francisco, along with Bayside neighborhoods in Alameda, Santa Clara, and San Mateo counties. We reached out to the FAIR plan. A spokesperson said the FAIR plan is required by law to have enough money to pay out anticipated claims. Policyholders can also qualify for discounts by hardening their homes against fire danger.